I'm excited to do this video, everybody. This is stuff I was doing in the 2018 bear market bottom. It's speculative. I sit here and I speculate with you. And I just want to say everything that we're going to talk about, there's a couple things I want to do. Number one is I kind of want to calm any suspicion that you have that this is all hype, because it's not. This is data-based. Everything I'm going to show in this video is data-based. I say it with an optimistic tone because everybody, I'm a happy, optimistic person. And even though we're in a bear market, that's okay. It's okay to be optimistic. Secondly, what I want to do in this video is I want to set the tone by saying crypto, and actually the data we're going to look at says that crypto could very likely see another low, see another bottom. And so taking all that into context, I want to jump into the video. In the next 10 minutes, I'm going to lay out some data that I really think is going to blow your mind when you just see it lined up on the screen in terms of a Bitcoin chart, a Cardano chart, and an XRP chart. It's absolutely insane. I was just going to do a regular ADA XRP video. I discovered some of this data and the consistencies that lie within here. I was like, I got to do this video talking about the bottom and kind of how it could potentially be weeks away, and it could be right in front of our face. And even the macroeconomic data tells us this. And I kind of I want to start, and I've been just kind of hammering home on this, but it needs to be hammered home. Investors may be surprised to learn that in the last 69 years, on average, stocks did worse in the year before a recession began than during the recession itself. I keep saying that, and I keep showing that piece of data because there are a lot of people in crypto, maybe you're one of them, that's just like, man, 2023 is going to be the recession. It is going to be bad. We're going so much lower than we are. 2023, we're not even there yet. Recession's going to be in 2023. This is going to get bad. Well, data suggests for the last 69 years worth of recessions, the worst year, the worst of it was the year before, i.e. 2022, which now, as you know, is almost over. We're like almost a month away. We're around a month away, everybody. So the worst could very well be over. And that could mean the bottom, truly, even if we go lower, is weeks away. And I want to prove it to you on the screen. I just want to prove this speculation. Again, this is how I see things. This is my opinion. I'm not even saying I think it's definite going to happen like this, but this is just how I'm watching the charts. And I was doing the same thing back in 2018, and it proved incredibly valuable for me in terms of my approach to the macro cycles, because right now for me, it's urgent. I'm trying to really get a nice grasp, a firm, confident grasp on what I'm doing in these markets. So digging into this data the way we're about to do it is how I like to do it. So I want to start here foundationally on the Bitcoin chart. You all know, I talk about it all the time, these yellow lines on the charts. This is a chart, everybody, that I charted all the way back in 2018. So when we're looking at the Bitcoin chart, it's based off of many different things, including the cycles of Bitcoin, but it's mainly foundationally built off these Fibonacci retracements. So for instance, the last swing low to swing high, meaning the bear market low to all-time high bull market high, we have this 786 line down here that we've just been waiting for Bitcoin to fall below. Bitcoin has finally done it. The reason we were waiting so much, and we're going to start infusing the XRP and Cardano charts here, and it's pretty cool, but the reason we're waiting so much for that is because this is what happened in the last bear market in 2018. It's also what happened in the bear market of 2015. If you've been watching my channel, you're probably sick of me saying it, but it's just necessary for me to repeat it. Now, note in 2015, 777 days after the 2012 halving is when Bitcoin kind of fell below 786 and bottomed, right? There's the move right there. Boom. Right at the end of 2014, December 2014. Now, if we go and we look at the next cycle, so 777 days past the 2012 halving. Now here we are past the 2016 halving. It was 854 days before Bitcoin fell below the 786 line and bottoms, right? So it fell below the 786 line 777 days, or I'm sorry, 854 days, but it actually bottomed 875 days. So 875 days, the cycle before 777 days. Now, if we look at Bitcoin now, we can see past the 2020 halving, we're 910 days in, and we have fallen below the 786 line. So if history repeats itself, truly, if history repeats itself, Bitcoin just fell below the 786 line. We're weeks away. If it repeats itself, and there's absolutely no guarantee it will, weeks away from the bottom. Whether or not we fall a little bit lower, a lot lower, sideways, we could potentially be weeks away. Interestingly enough, if we open up the Bitcoin RSI and the momentum oscillators, even just the slower moving momentum oscillator here, the RSI, it's lining up so nicely with those previous bear markets. So everything coming together. And remember, do not forget that recession data that we talked about, because I know things are bad. I know things are bad right now, but there's still a cushion for downside as we end out this year, the worst year before the actual recession. So keep these things in mind as we dig into this data. So that's Bitcoin. It's just kind of foundational. It's a roadmap to the cycles of crypto. Then we go over here to Cardano, and here's where Cardano is. It's kind of like, and I see it in the comments, people are just, man, Cardano is just underperforming. Cardano's terrible. Everything is down, everybody. Everything is down. Some down more than others, but Cardano ADA kind of just sitting average. It's just down, just like everything else. It's not as underperforming, and it's just is what it is. And even if you look at the last bear market, it's so similar. But I started being like, I want to dig into what's going on here, because we did get the 786 break below Bitcoin, right? It's a huge indicator for me. So I dug into the ADA chart on the daily, and I went back to the last bear market, and I went to mid-November 2018. The reason I did that is because, again, if you go to the Bitcoin chart, mid-November 2018, what was happening? Bitcoin was breaking the 786 line. This is the move that just happened on Bitcoin for us most recently. So mid-November 2018 on Cardano, you can just see Cardano falling, right? And then it kind of getting a bounce back and then bottoming out. Now, what's so interesting, I know it doesn't look like a huge move, but if you look at Cardano, that last little pump before it did bottom out, if we go and we get our price range, you can actually see that swing high to the bottom, that was like another 40% dip. That's a very big move. Now, the reason I'm doing this is because we go to an ADA chart today and we compare it to the mid-November move for the bear market that we just looked at on ADA, because Bitcoin fell below the 786 line. Well, Bitcoin most recently fell below the 786 line, and here's ADA. There's room for downside. I'm not saying it's 40%, but I'm just saying there's room. If history were to repeat itself, there's room to downside. But just notice the chart on Cardano now versus back then. We kind of had this sideways consolidation on ADA before the 786 on Bitcoin broke and ADA fell. And here we are again on ADA, kind of had this sideways consolidation before the 786 on Bitcoin fell, and we put in a new low. So new lows on ADA right now, new lows on Bitcoin right now, right? And we can circle that. And it's the same thing that happened back here, new lows. So new lows all around, as 786 line being broken. Now here's where things get really interesting. It's kind of taking now another data point. Each coin is a data point. And all these charts do kind of come together to tell an interesting story of consistency and repetition. That's what I love about doing technical analysis. People are just like, history doesn't repeat itself, but history, everybody, and the data that is infused into these charts, history it's just been my most helpful tool. And that's just something I know for a fact, right? So I know things are not perfect and history doesn't repeat itself always, but the data that lies within this, it's incredibly valuable. And so I'm doing right now the same thing I was doing in 2018, speculating, but we got it so close to right back in 2018 when I did this chart. This chart had not happened yet, right? We charted this back then. We had the speculative move to 90,000 and back down to 20,000. We were a little off, but look what happened, 70,000, and now we're at like 16,000, very close. So I'm using the same type of speculation based off of historical data to do what we're doing right now. But back to the XRP chart now. This is where things get interesting, because we dug into ADA in 2018 in mid-November. Now we dig into XRP, mid-November 2018. Bitcoin breaking through that 786 to the downside. And look what XRP did. It fell, but it actually didn't put in a new low like Bitcoin did in 2018 and 2022, and like ADA did in 2018 and 2022. XRP didn't do that. It actually just kind of saw a higher low of consolidation, sideways, volatile, and then obviously exiting, that time frame of bottoming out. Markets fell, right? This is July 19. There's COVID, so we know what happened there, but that's not this part of the story we're focused on right now. We're focused on this bottoming out range. So if you zoom out now, look at the similarities. We even have XRP falling with markets, right? XRP falling with markets, a little bit of sideways, a pop up, right? right into the 50-week moving average, into the 50-week moving average. Here's mid-November 2018, Bitcoin falling below the 786, XRP falling, and not putting in a new low. Not putting in a new low like Bitcoin, not putting in a new low like Cardano. So I went over here to the daily chart, and I just wanted to chart the whole move on the daily, which is to say basically this move, starting from there, the pop up, back down, not putting in a new low, and then sideways. And the reason I wanted to chart this wasn't just to show the repetition of it, but I wanted to prove a point, or at least talk about an important point. Just because there's so much consistency across all of these charts, and it's actually insane for me just to look at this. And I'm not hyping anything up. I'm literally reflecting to you what I'm seeing on the charts, and it's repetition. You see it. It's not something I even need to like explain that much. It's right in front of us. The reason I'm charting this bars pattern is because even though you see XRP back then, and this is the 2018 move, it bottomed kind of in a way in that bear market, and we saw what Bitcoin did, right? Bitcoin bottomed and kind of started making a move up. You see that before coming down. XRP underperformed all in this area, but XRP, it's just sideways and volatile for a while. This is a daily chart, but from right here, the swing low, all the way over here is months and months and months, right? So the reason I bring that up is because the bottom for crypto, we can go to Bitcoin chart just because it's such a nice roadmap. It's such a nice looking roadmap for us to look at. But the bottom, yes, might be close, right? And it could go lower, maybe down to here. It could be right here. It could be down here, 12,000. The bottom could be in weeks. It really could be in weeks. And I'm not saying I think that's going to be what it is, but it's very possible. We're weeks away from the new low and the bottom. But after that, it could be grueling. And that doesn't mean it's just because 2023 is a recession and things are just going to fall even more and get terrible. But it could be grueling because this is how the crypto markets are. And you can just look back here and you see the markets are volatile and grueling and sideways, right? You go look at something like ADA, and we go back here and look at that. It's grueling, right? Especially for the altcoins. You can see it's just grueling. And XRP, same thing. So it gives a nice picture of just because the bottom might be in doesn't mean we're mooning and we're entering a bull market. But I just think when we look at charts like this, and we're looking at XRP, for instance, because that's a chart I'm on, I think people think that all of this, which is 2023, is going to be so terrible because it's a recession and we're just going to keep falling. And I don't think that's the case. And I could be wrong, and history might not be so consistent and friendly to us this time around. But I really heavily lean towards the data. And the data is the consistencies of the markets. The data is the fact that human beings are behind these charts. Human beings are behind these cycles. The data tells us, once again, don't forget it, in the last 69 years, on average, stocks did worse in the year before a recession began than during the recession itself. And so we know that if stocks were doing worse in 2022 and they do better in 2023, crypto will also very likely, because it's highly correlated, also be doing better. So this is something I'm very much keeping in mind, but just notice how I'm very much in tune with the fact that we can go lower. I'm anticipating it actually, and I'm trying to be very careful as I try and figure out how I want to approach these markets as a macro person. I'm a macro-minded person. But the data, as I dig into things like this, is just incredible to watch these things play out. It's incredible to see how even just an XRP chart, even with the Ripple SEC case going on, this chart, it's so similar, right? And it tells such a similar story. And my almost 5 years now, I'm around a month away of being on here, YouTube, 5 years tracking these markets. That's something that has been the most consistent thing that history keeps telling. Such a similar story, cycle after cycle. This is one thing that I've seen, and I'm just sharing that data with you. I'm really just showing you the data, and it excites me to see it because we're all here for the long term, it seems, and we're still in such an early space under $1 trillion market cap as a whole, and seeing how these charts, there's all these hidden data points within all of these charts, seeing them come together. Truly something cool to watch. Hit the subscribe and like. Let me know your thoughts in the comments below. I know many of you will. I know many of you disagree with everything I'm even talking about, but that's okay. I appreciate you anyway. I'll see you in the next video. God bless.